Okay, so this session is about cost analysis for decision making. So which means in order to make a decision, we need to analyze some kinds of cost. Means, in other words, we can say that what kind of decisions organizations they need to make by using different kinds of cost, and which types of cost contribute or support management to make a decisions, or which types of cost normally we ignore it because that's not really helpful to make right decisions. All right, so this is all about topic 5. But before I move on to topic 5, uh, I just want to inform you one thing. Yesterday, I received email from university, and they said that the university is planning to open soon. I guess it's, if I'm not wrong, it's going to be 9th of May or 11th of May, maybe some dates like this. So, but university, I mean, it depends upon the teacher. They want to teach online, like as now I'm teaching you, or teach in the class, in the university, I mean, on-campus classes. So, so I decided to keep teaching you online, right? Because after this session, we have, after these sessions, we're gonna have 2 more sessions, all right? So 2 more sessions means, let me show you the calendar. So can you see that calendar? Can you see that? Yes or no? Say something.
Yes.
Okay. All right. So today is Thursday, right? You can see today is Thursday. So after this session, we're gonna have 2 more classes. All right. 2 more classes means next session will be on 7th of May. All right. Next session's gonna be on 7th of May. All right. And 14th of May is the last class for cost accounting, right? And this is a revision session, right? In this revision session, of course, I will talk about your the previous topics that we have studied, and of course your final exam informations. All right, so I repeat, today, next week, these 2 lectures we talk about topic 5, right? So you're not going to study topic 6, 7, or 8. You have total 5 topics. All right, so this lecture, I mean this, yeah, of course, today and next week will be your topic 5. So today we will study something theory, and next session, next week, we will do some calculations. And in this session, 14th of May, we will do the revision session, right? Revision sessions, of course, whatever topic, which topic is going to be in your final exams, and what type of final exams, multiple choice question or long answers, open book, closed book, all information I will give you in this lecture. And this lecture is the last lecture, right? This is the last session, right? Everybody understand? So 14th of May will be your last class. After 14th of May, no any class. And then you will have final exams. I will also inform you the date of final exams. And now, let me show you something here. Okay. So if we talk about few things I need to tell you, final exams, right? Your final exams, you have to come to university for your final exams, right? Like as normally you did it you did it in the previous semester, all right? So you have to go to the classrooms for your final exams. So I will take your final exams in the class, all right? I will tell you date for final exams. I will tell you the date of final exam on 14th May, because 14th May is the last lecture, all right? Okay, so that's the ideas, all right? Okay, so now don't ask me, teacher, we have a multiple choice questions or not, all these things. Do not ask me now. So you have to wait for this lecture, all right, on this day. Okay. Second thing is we gonna keep studying online till 14th May. So which means today is 30th of April, right? Next week is the 7th of May, and next to next week is the 14th May, right? So these 3 lectures will continue as a online, right? All classes will be online until we finish. So next week, which is here, and next week, which is next to next week, which is 14th of May. So you don't have to come to the class for cost accounting class, only for my class. I do not know about other subjects, all right? So only for cost accounting subjects, you don't have to come to university. I will keep teaching you online, like as I taught you previously, or I'm teaching you right now. Everybody understand? Say something, yes or no? Did you understand?
Teacher, I have a question.
Yep.
On 14 May, we have go to school and study another subject. What time you have online on Zoom?
Okay, so if 14th you have to go to school because you have a other class, then I'll teach you on Saturday, which means, let me show you. Let me show you again the calendar. Okay, so you said you have a class on, so you will start university from 11, right?
Yes.
Okay, if you start university from 11, then I will not give you online on 14th. So I will give you online on 16th, because normally I teach you either on Tuesday or Saturday. So is it okay Saturday? Last lecture, 16th?
Okay.
Is it okay with everybody? Timing will be same like as now, maybe 2:30 to 5 p.m. right? 2:30 p.m. to 5 p.m. Is it okay with everybody? Say something. So not on 14th. Let me check. Uh, I have on Saturday. Do you have class on Saturday? Okay. Can you tell me everybody's free on Tuesday? Everybody free on Tuesday?
What time?
Same afternoon? Same afternoon. Do you have class Tuesday? Okay. So what I do, I follow your schedule. So let me change something here. So let me change it here because some of you are busy on Tuesday and some of you are free on Saturday. So what I do, because according to your schedule, some of you study on Tuesday and some of you study on Saturday, right? If I'm not wrong. So let me check who study on so let me check. Let me show you the schedule so you can understand then. I cannot find the photos. It's here. So let me check your schedule again. Okay, so here is your schedule. So let me write for you here. So class 05 and CLC 1, all right? These two classes study on Tuesday, all right? And CLC 2 and CLC 3, they study on Saturday. Am I right? This is your schedule, right? Say something, yes or no?
Yes, that's right.
That's right, okay. So what I will do, because you will start university from 11th May, right? You start going school from 11th of May. So on 12th of May, I will give you last session, all right? So Tuesday, I will teach you 12th of May. If you are from these classes, you attend here. And same lecture, same session, I will teach you again on 16th of May, all right? So means I will give you revision session again. So of course, both session is the same, all right? And of course, I will record both session and I will upload both session on YouTube later on, all right? So if you are available in this schedule, you come to this day, right? If you are available as per this schedule, you come this day. But remember, this is the revision session, right? You don't have to attend both. Of course, you attend either this or this, but I will teach you 2 times. Same informations, not different at all. Is it okay with everybody?
Okay. Yes.
All happy with this schedule? Everybody's happy with it? Okay, all right. So the idea is, so let me go back here. So the idea is, so let me change here. Right, so okay. So this is today, this is next week, and this one is the last lecture, right? That will be your last. So online until 16th. So I'm keep teaching you until we finish. So we will finish on 16th of May. So my suggestion for you is that please attend only your class, all right? Because sometimes if you try to attend this class, maybe the number of students gonna be exceed the limits, which is 100, and then some of students cannot join it because they belong to really from that class, all right? So please try to, if you belongs to this class, you attend here, and if you belongs to this class, you attend here. If you already attend here, then you don't have to come to this class, all right? You just come here, and then after finish, I will record it and I will upload. Same here, record and upload. So you can check. If you did not come to 12, you can check on online that what teacher is teaching on 12, all right? So everybody's okay with this schedule? What time on 12? Yes, timing will be the same, all right? Timing will be the same, which will be, because it's an online, so it's gonna be 2:30 to 4:30. It's gonna be like this. Is it okay? This time is okay, 2:30 p.m. to 4:30 p.m. Or you have a class? Let me know if you have a class, you are busy. So everybody's okay with the time? Anybody has any problem with this time, 2:30 p.m. to 4:30 p.m.?
It's okay.
Okay. All right. So anybody has any question before we start topic? Could you give us the sample answer of our previous assignments? Yes, I will give you, but I haven't finished marking your assignment. So once I finish marking, because I'm in the process of marking your assignments, which is of course your midterm, and I will try my best to give you results before 16th of May. All right, so before last session or revision session, I will give you results, and then you can check, and if you have any question regarding your assignments, you can directly ask me in the online session, in the revision session. Because revision session, I'm not going to teach you something new. We finish all the topics on 7th of May, and then 12th or 14th is just a revision. So we have a much more time for interactions. I mean, I have more time to answer your questions, all right? So any question? Any questions regarding this kind of arrangements, or any questions regarding the dates or time or anything? If no questions, can we start with the next topic, which is topic 5, last topic. Can we start? Say something. Can we start topic 5? Okay. All right. So we start next. Topic 5. I also uploaded this topic. I don't know, did you find that topic or not? Topic 5. It's already available on internet. I already uploaded before. So if you already watch, that's good. If you haven't watched it, so you can watch it later if you want. If you haven't watched it, so still this session or this recording session is enough. So you don't have to watch it if you haven't watched it. All right? But if you already watch it, that's good. So you can understand what we're going to study in this session. All right. So topic 5 is about cost analysis for management decisions. Cost analysis for management decisions. So means we're gonna analyze the cost that help managers to make a decision in our organizations. All right. So this session is divided into 4 parts. Means we have 4 learning outcomes for this topic. The first one is the cost allocation method. So we're gonna study 2 methods. The first one is the absorption costing, and second one is a marginal costing. These 2 are the cost allocation method. And then second learning outcome is about cost volume profit analysis. All right, cost volume profit analysis. So now what does it mean, cost volume profit analysis? That's we will study. We also call it break-even analysis, right? Next, third learning outcome is target profit. How can we find out that how many units we have to sell in order to achieve target profit? So with the help of target profit formulas, we're gonna find out that how many minimum sales units we need in order to generate that kind of estimated profit. That's learning outcome 3. And the 4th learning outcome is about different kinds of decision making organization need to make it. And all these kinds of decision making, the most important informations management need, it's about the, let me check, am I recording? Yeah. So the most important information needed to make all this kind of decision is cost informations, all right? And which types of cost, of course, we will study, and we're gonna find out that some kinds of cost are relevant and some kinds of costs are irrelevant. So what's mainly the difference in these 2 types of cost, relevant cost and irrelevant cost? But relevant and irrelevant, both kinds of cost important for decision making, right? For your final exams point of view, of course, this topic is part of your final exams, but I'm still considering whether I will give you whether I give you multiple choice questions, or I'll give you long answers, or I'll give you both. I'm still considering. I haven't decided yet. So of course I have a time to make a decision on 16th or 12th of May. I'll give you my decisions. All right. So for these sessions, I may not go more detail in calculation. For these sessions, I may focus on calculation part in the next session, but not in these sessions. All right. Yeah, so this session we focus more on the formulas. We focus more on concepts to understand all these four types of learning outcomes. All right. Okay. So could you please tell me for your other subjects, so you're gonna start from 11th of May, or you have an online? You have online classes? Topic 5. Okay. So start with the first learning outcome. First learning outcome, which is about cost allocation method. Cost allocation method. Now, what does it mean, cost allocation? Cost allocation method means it depends what methods organizations they choose to allocate the cost, to divide the cost, to distribute the cost, all right, into two parts. So, okay, these two, so we have two cost allocation method, right? So I repeat, cost allocation method help us to understand that different organizations, they apply different way to dividing the cost. From some organization, they choose by functions, means on the behalf of manufacturing and non-manufacturing, they allocate the cost. And some organization, they allocate cost on the behalf of behavior, right? Which means fixed and variable. So they allocate cost on behalf of fixed and variable, not manufacturing, non-manufacturing. So it depends which methods we apply to allocate the cost, all right? So we allocate cost by functions, right? By functions. And second way is by behavior. Okay. By function means we allocate, because every organization has mainly two functions: manufacturing, all right, and non-manufacturing. Some departments involve in manufacturing, some department involved in manufacturing, right? Some department, department means what they do, functions, right? And some department involved in non-manufacturing. So by function means then we allocate the cost on the behalf of manufacturing and non-manufacturing. This is called by functions, right? I repeat, we allocate the cost by manufacturing or non-manufacturing. So we call it manufacturing means factory. Some department involved in manufacturing, that of course belongs to factory, and some involved in non-manufacturing by office. So office is non-manufacturing and factory manufacturing. All right. So by function means we are allocating on behalf of manufacturing and non-manufacturing. By behavior, cost allocation by behavior. By behavior means the behave of the cost. How does cost behave? Some kinds of cost behavior is unchanged. All right. They do not react. They do not increase or decrease as per the level of activities. That's kind of cost called fixed cost. All right. And some cost behave as per the level of activities, which means high production, high cost, low production, low cost, no production, no cost. That cost called variable cost. So the idea is the cost behavior divided into two different types of cost, which means variable cost and fixed cost. All right. We find out cost on the behalf of behavior, which is variable and fixed. All right. Okay. So we use these two different bases to allocate the cost. All right. But until now, I haven't introduced you the name of the methods. This is not the name of method by function or by behavior. This is the base that we use it to allocate the cost, right? Or we can say that these kinds of two categories of cost allocation help us to implement the right method, right? So methods involve by function. This method called absorption costing method, which base is function, right? So that's the name of method, is a absorption costing. Absorption costing method. And by behavior is a marginal costing method. Absorption costing, marginal costing. All right. So we used these two different methods. So base of marginal is variable fixed and absorption is manufacturing, non-manufacturing. All right. Now, another name of marginal costing, we also call it variable costing. Variable costing method. Another name of marginal costing is a variable. So we also call it variable costing method. And another name of absorption costing is a full costing method. Full costing method. I will explain you later that why we call it variable costing method, right? Why we call it variable costing method or why we call it full costing method. I'll explain you later. Right? So let me explain you more about absorption and marginal costing. And then when you got the ideas that how we allocate the cost in absorption costing and in marginal costing, then I will explain to you that why we call it variable cost, variable costing method, or why we call it a full costing method, right? So let's start with the absorption costing method. So how we allocate the cost. You already got the ideas. We allocate cost on behalf of manufacturing and non-manufacturing. So start with the sales. We have sales or revenue. All right, sales or revenue minus cost of goods sold. Another name of cost of goods sold is a manufacturing cost. All right, we also call it cost of goods sold, manufacturing cost, factory cost. And you know that cost of goods sold is a combination of three things you already studied before. It's involved direct material, direct labor, and overheads. This is the combination of all these three types of cost is called manufacturing cost, right? If you want to calculate cost of goods sold. So what is the formula for cost of goods sold? The formula of cost of goods sold is a opening inventory plus purchase, labor and so on, less closing inventory. All right, whatever is left, that's called cost of goods sold. This is the formula to estimate cost of goods sold. All right, and of course you have a material and labor as well. Oh, sorry, labor and overheads too. So this is cost of goods sold, which is called manufacturing cost. So sales minus manufacturing cost is called gross profit or loss, depends. If sales is more than cost of goods sold, we have a gross profit. If sales is less than cost of goods sold, then we have a gross loss, right? Now, what gross profit tells us? Gross profit tells us about product profitability. Right? That's the meaning of gross profit. That's the meaning of gross profit, which means this product is profitable to produce or not. Product is a profitable to produce or not. If we have gross profit, that means this product is a profitable. In simple words, this product is giving us profit after production. After production, whatever cost we have, if we subtract that cost from the sales, we have profit. All right, it's a gross. It's not a net. It's not a final profit. All right, it's just a half of the picture. It's an incomplete information. All right, but we cannot make a decision on gross profit. We have to make a decision on net profit, whether this product is a successful or unsuccessful. All right. Okay. So once we have a gross profit, we're gonna minus non-manufacturing cost, right? Non-manufacturing cost here, office cost. You know that. What inside non-manufacturing cost is involved? Marketing, advertising, administration, packaging, labeling, distribution, transportations. All this information you already studied in your maybe lecture 1 or lecture 2. You know that, right? So gross profit minus non-manufacturing cost, it's called net profit. Now here we got the net profit. So overall, this product giving us profit or maybe loss, depends. Here is a gross profit, here could be net loss, depends on this cost. But here we have gross loss, here can't be net profit because cost increase in this step. So it depends. This is called absorption costing, right? Let me explain it more because it's a cost allocation method. So you can see that it's a cost of goods sold, which means manufacturing cost. This cost of goods sold is a combination of variable cost and fixed cost. In this cost of goods sold, we have some variable, some fixed, like as here. Direct material, variable. Direct labor, variable. And overheads, fixed. All right? So it's a combination of variable cost and fixed cost. All right? So exactly here. Some variable, some fixed. Same like as cost of goods sold, this non-manufacturing cost also involve two costs. Some are variable and some are fixed, right? These variables involve marketing and advertising. Marketing and advertising is a non-manufacturing cost, but it's a variable. Why? Because we do more marketing, more costs occur. We do less marketing, less advertising, less cost occur, all right? Packaging, labeling, distribution. These kinds of costs also variable cost. We do more packing, we do more labeling, we do more transportations, or more costs occur, right? Now, fixed non-manufacturing cost. Fixed non-manufacturing cost means any kinds of fixed cost that belongs to office, like as salary for accountant. The people who are working in an office, their salary is normally fixed. All right. Okay. Another example is we have some kinds of machines or equipments that we are using in an office. This could be a computer, it could be air con, this could be a printer, photocopy machines, and all these kind of things. All right. So whatever is a depreciation on all these kind of machines which are used in office, that is a fixed cost. If we're renting the office, also fixed cost. If we bought any insurance for any items that belongs to office, insurance premium, that's also fixed cost. All right. So all these kinds of cost called fixed non-manufacturing costs. But the idea is here, it's not important. It's not important to focus on variable and fixed. Not important, because absorption costing focus on manufacturing cost and non-manufacturing cost. We allocate on behalf of manufacturing and non-manufacturing. We divide on behalf of manufacturing and non-manufacturing, not behalf of variable and fixed. I'm writing here variable and fixed just for your information, to explain you why we call it full cost. The reason to call full cost, you know that total cost could be manufacturing, non-manufacturing, or total cost could be variable plus fixed, like as here. It's a product. In this product, some costs are fixed, some costs are variable. If I add fixed cost of this pen and variable cost of this pen, I come up with the total cost. All right. So total means full, no more, right? Full cost. Variable plus fixed. That's why we can say that in this manufacturing cost, or when we calculate gross profit, we have full cost, all cost, which is variable and fixed, full, right? That's the reason to explain you here variable fixed. But remember, the base of absorption is manufacturing and non-manufacturing. Sales minus manufacturing, gross profit or gross loss, minus non-manufacturing, net profit or net loss. All right, that's the ideas behind absorption costing. All right. Next one is the behavior. All right, cost allocation by behavior. So let's start with the same thing. We have sales or revenue minus variable manufacturing cost minus variable, let me write down in another way, make it simple. So sales minus variable cost, it's called contribution margin, right? Minus fixed cost, it's called net profit or loss. All right. Okay. Now, this variable cost is a combination of two types of cost: variable manufacturing cost and variable non-manufacturing cost. So this is your total variable cost. Sales minus total variable. Total variable means some variable come from manufacturing and some variable come from non-manufacturing, right? So that's why sales minus total variable. Variable manufacturing, you know that. What is variable manufacturing? Direct material, direct labor, or maybe direct expense. Depends, right? And what is variable non-manufacturing? You also know that. Marketing, advertising, transportation, labeling, distribution, so on, right? So variable plus variable manufacturing plus variable non-manufacturing, it's called total variable. Sales minus total variable cost is called contribution margin. All right. Now, what is the meaning of contribution margin? Contribution margin means there is an argument that only variable cost contribute. There is no any contribution of fixed cost. All right. Now, what does it mean, contribution? So let's say variable manufacturing cost. What is the contribution of variable manufacturing cost? The contribution of variable manufacturing cost is variable manufacturing cost maximize company variable manufacturing cost maximize company production. Of course, it's directly involved in production. More material, more labor, more direct cost, which means more production increase. So it means it helps us to maximize the production. It has a contribution in production, right? Variable non-manufacturing. What is the contribution of variable non-manufacturing? So let me give you example of marketing and advertising. What is the contribution of marketing and advertising? Do they contribute to increased production? No, of course not, because they are not a manufacturing cost. Only manufacturing costs contribute in production. But what is the contribution of marketing and advertising? The contribution of marketing and advertising is to maximize company sales. We do more marketing, more advertising, customer will be more aware about that product, and that awareness will give positive impacts over the company revenue. As a result, company revenue will increase. All right. Same thing here. We much more involved in transporting transportations, transporting the products to the customer. We involve spending lots of money to deliver product to the customer. Customer like it. All right, like as for example, now we are all world facing the pandemic of COVID-19. So in this COVID-19 situation, people are avoiding to go out, even though government also announced lockdown. And of course, so in this case, in order to maximize some kinds of restaurants, they are allowed to open. What they involve in? They are involved in delivering the products. If they deliver the products, customer will order more product, because customer don't want to go to the restaurants. They want to order online. So customer order online, they will deliver products to the home, all right? Free home delivery or something like that. All right. So as a result, that's free home delivery increase the company sales, because people order more. People don't want to go out. If any restaurants is not involved in distribution product, means you have to go to that restaurant. They don't have any delivery facilities. People will not order any food or any items from that kind of restaurants or that kinds of shop, right? So idea is marketing, advertising, or distribution. These kinds of variable non-manufacturing costs contribute to maximize sales, all right? Fixed manufacturing cost. There is no any direct contribution. Supervisor, depreciation, rent, all this. There is no any contribution to maximize the production, right? Directly contribution, right? Same thing, fixed non-manufacturing cost could be administration, could be depreciation of office items, so on. There's no any contribution to maximizing the revenue. Of course not. So that's the reason we call it contribution margin, which means we will focus only those items, those costs which contribute something, contribute maybe in production, which is variable manufacturing, or contribution in non-manufacturing, like as marketing and advertising, right? That's the meaning. We call it contribution margin, right? So after contribution margin, we got fixed cost. And here, fixed cost is a combination of two kinds of cost. Fixed manufacturing cost and fixed non-manufacturing cost, right? These two types of cost called total fixed cost. So there is a contribution of total fixed cost. I mean, there is no any contribution of total fixed cost. So contribution margin minus total fixed cost, it's called net profit or net loss. All right. Okay. So now I guess you got the ideas that why we call it variable costing method. The ideas to call it variable costing method is that only variable cost contribute, maybe either in production or sales. There is no any contribution of fixed cost. If there is no any contribution of fixed cost, keep it separate. Allocate cost behalf of variable and fixed, because there is no any contribution of fixed, so keep away from fixed. Keep it separate. So that's the meaning of allocation on behalf of fixed and variable, all right? In absorption, allocation on behalf of manufacturing and non-manufacturing. Why? Because the activities going on in a manufacturing factory is different than the non-manufacturing. They have a different activities. They have different kinds of costs. So don't merge these two types of costs, because working environments or activity of factory and office different. All right, because office more about service, and factory more about production. So keep them separate, right? Don't keep it together. So allocation on behalf of manufacturing and non-manufacturing. That's the ideas behind absorption costing and marginal costing. All right. Did you understand? Did you get it? Say something. Did you understand? Okay, so any questions? Because number one learning outcome finish. Absorption marginal finish. I will show you calculation in the next session. All right. So absorption marginal finish, learning outcome 1 is finished. So anybody has any question regarding learning outcome 1, or we move on to learning outcome 2? Any questions, or we move on? Okay. So move on.
Excuse me, I have a question.
Yep.
By doing two methods, net profit or loss of two methods is the same or different?
Okay. The net profit of these two methods will be different. It will not be same. All right. Now the question is why? All right. That's why I think I have to teach you calculations. But anyway, without numbers, I try to explain you that why net profit gonna be different. All right. But in the next session, next lecture, when I'll give you some numerical examples, then you understand better. All right. Yes, you have a calculations. Next lecture, I'll give you calculations for absorption costing and marginal costing. Next lecture is more about calculations session. All right. So now let me explain you that why net profit of absorption costing is not same of net profit of marginal costing. All right. So if we calculate manufacturing cost per unit, what will be the manufacturing cost per unit in absorption costing? When we calculate manufacturing cost, because it's really important to calculate manufacturing cost, all right? To understand how much money we are spending on manufacturing, no matter we follow marginal or absorption. It's really important, right? So when we calculate manufacturing cost per unit using absorption costing, then what inside manufacturing cost? If you calculate direct material, direct labor, and overheads, right? But when you calculate manufacturing cost per unit only, using marginal costing, then we have direct material, direct labor, not overheads, because overhead is fixed. So manufacturing cost per unit for absorption costing is different than marginal costing. Manufacturing cost per unit different. Manufacturing cost multiplied by number of units, so total cost gonna be different. All right. So I think so that's the very, very basic example to understand that why the net profit will be the different, because cost cannot be the same in the both cases. Cost cannot be the same, because every time if you want to calculate any type of cost, we always calculate cost per units. All right, so remember, when we talk about fixed cost normally do not comes per units. Fixed cost normally comes as a total, but variable cost always comes, so let me write down here, variable cost always comes in per units, but fixed cost always comes as a total, because it's a fix, it always comes in total. But variable cost, it change as per number of units. So when we estimate variable cost, we estimate on behalf of per units. All right, we fixed cost, we less likely to convert per units, because the way to estimating fixed cost per unit is not reasonable. Right, so these kinds of explanations, I think I should explain you in numbers. All right, so in next session, where I'll give you numbers, when I'll give you complete questions about absorption and marginal costing, and then we will find out in one question we apply two methods, that why these two methods are giving different profit. Right now, if you ask me that which method is better, then it's hard to say which method is better, absorption or marginal. It depends. It depends. But if you are involved, in cost accounting or management accounting, you're more likely to use marginal costing method for decision making. Why? Because fixed costs do not contribute. Fixed cost is uncontrollable. Fixed cost is unavoidable. Right? So fixed cost is not important to think about, because you can't reduce it. Think about something that you can reduce it, which is marginal costing. All right. So internal point of view, decision-making point of view, company apply marginal costing. When company show its profit to outsiders, company apply absorption costing, because absorption costing is a focus on manufacturing and non-manufacturing, showing the complete information. Manufacturing focus more on the variable cost. All right. So both methods have its own importance. All right. That's normally we use it. So next session we will do some calculation, and then you will get the ideas. All right. So any other question before we move on? Move on to 2. Any question? Okay, so we move on to number 2. So number 2 is about cost, volume, profit analysis. Okay, so let's start with the second learning outcome, which is cost, volume, profit analysis. Another name of cost, volume, profit analysis is, we also call it break-even analysis. Break-even analysis. Now, what does it mean, break-even? Break-even means when your fixed cost equals to contribution margin. When your fixed cost equals to contribution margin, what does it mean? Our profit is 0. profit is 0, loss is 0. Then no profit or no loss. This is called break even. All right. Or another way to understand break even is your sales equals to total cost. If your sales equals to total cost, your profit is 0 and your loss 0. As a result, break even, no profit, no loss, right? That's the concept of break even analysis, all right? Now the important is why we have to study break even analysis. The idea is when we start a business, no businessman, no any entrepreneur wants to start business with loss. All right? Nobody wants to start a business with having loss. All right? But is not confirmed whether we will make profit or not. Is not sure because it's all about future, is future expectations. So that's why before we estimating profit or before we making efforts to make profit, we have to make minimum efforts so we can avoid the loss. All right, minimum efforts to avoid the loss. So here is profit, let's say plus $1 is a profit. No profit, no loss. Minus 1 is loss. So that's loss, $1 loss, $1 profit, and here is break even. Of course, nobody want to start business with loss, right? But expecting profit is good. But before expecting profit, every businessman wanna make efforts to sell minimum units, so at least that businessman is not having loss, right? If you have a break even, it doesn't mean that your business closed, but nothing comes in your pocket, but at least you are not losing anything too, right? Nothing comes in your pockets, but at least nothing out from your pocket too. That's the meaning of break even. So every businessman in a business wanna make minimum efforts, at least that efforts, so you're not gonna have a break even. All right, so that's the importance of break even in an organization, right? So now we're gonna understand break even with the formula. So we have two types of break even here. One is break even in units. Break even in units and break even in dollars. Break even in dollars. Now, what does it mean break even in units and break even in dollars? Break even in units means how many units we have to sell, so at least we have break even. At least how many units I need to sell in order to reach these points, right? If I sell more than that, good news, because profit. If I sell less than that, bad news, because have profit. So I need to find out how many units I have to sell at least So I'm not gonna having a loss, right? That's the meaning of how many units I sell. This is called in units. So with the help of this formula, you find out how many products, right? And in this formula, you will understand how much revenue we need to generate. In simple words, how much sales we needed, how many dollar sales we needed, so at least we're not going to losing any money, but not making two, so break even. All right, so we have a two different formula, break even in units and break even in dollars. All right, so let's start with break even in units. So what is the formula for break even in units? Formula is total fixed cost divided by contribution margin per unit. Contribution margin per units. So if you have total contribution margin divided by number of units, all right, we will get it, contribution margin per units, right? Okay, so that's will give you break even units. Break even units. So means that much units give you break even. Now, break even in dollars. How we calculate? Formula is total fixed cost divided by contribution margin ratio. All right? Contribution margin ratio. Now, what is contribution margin ratio? Formula for contribution margin ratio. Formula for contribution margin ratio is contribution margin divided by sales multiplied by 100. So of course it's a ratio, so your answer gonna becomes in percentage. All right, so percentage. So total fixed cost divided by whatever percentage, we get it from this formula, right? This is called contribution margin. Sorry, this is called break even in sales or break even in dollars. All right, so it means if you generate that much money, you're not gonna have a loss. All right, so that's the ideas behind cost volume profit analysis or break even analysis. All right. So this cost volume profit analysis or break even analysis, we can use graphical representation. All right, with the help of graphs, we can understand break-even analysis. So I'm going to draw the graph for you to understand it, how break-even analysis look like through graph. So x-axis is a quantity and y-axis is the dollar, right? Quantity or units, anything. You can call it units or you can call it dollars. Right. So that's your sales. That's your sales. Sales curve look like variable. Why? Because its nature is variable. You sell more units, you make more money, right? You can see that you sell more units, you make more money. So that's why it's curved like as variable cost, right? And here here, so that's your total cost. Why total cost? Because it's a combination of, this is variable, right? It's a variable. It's a little bit upward. It's a combination of variable and fixed. Remember we studied before semi-variable. Semi-variable means fixed and variable both. It's like as fixed plus variable is the total cost, right? So until that's your cost and that's your revenue, right? So now you can see this area, and this area. This is your profit area. You're gonna make profit. Why? Because your sales here is higher than cost. Your sales more than cost. You can see that. That's your sales, right? And that's your cost. So sales more than cost. This is your loss areas. You're gonna lose. Why? Because sales less than cost. That's your sales, for example. That's your sales. And that's your cost. So cost is higher. So means loss. Now what these points? These points is sales equals cost, which means this point. So let's say point A. So this point A known as break even points. All right. So if you want to find out where is break even in units, then go down. That is break even in units. Right? That's break even units. Means if you sell minimum that units, you're gonna have no profit, no loss. If you sell more than that, you will have a profit. You sell less than that, you have a loss. Right? This is break even in units. And this points, this is break even in dollars, right? Break even in dollars. So means if you make more than that, go up. So here, so you have a profit. If you go below that, right? If you go below that, you're gonna have a loss. All right. So that's the ideas to understand break-even analysis using graph. All right. So whatever answers you got it, you can use that answers. You can use that information or number to prepare your graph. So this kind of graph representation also says cross volume profit analysis. This is the way to showing that's a very quick view over the company, that how many units we're going to sell it to make profit, or how many units we're going to sell it to at least have a break even. If you sell below that or have that, so maybe loss or profit. So that's all about cost volume profit analysis. So cost volume profit analysis is finished. So any question? Any question regarding cost volume profit analysis? Say something. Any questions or move on? Quickly tell me any questions or move on. Okay. Let's move on to 3. So remember, your topic 5, you have 4 learning outcomes, right? In this session, we will cover 3 learning outcomes, and 1 learning outcome we cover next week, right? And in next week, we will also do calculation. So next week, we do learning outcome 4, and then we move on to calculation for marginal, absorption, or maybe break even, and so on. So learning outcome 3. So learning outcome 3 is about target profit. Target profit. Now, what does it mean, target profit? Target profit is the profit that you want to earn it. Your target, your expected, right? So we also call it expected profit, that you are expecting. Expected profit, the profit that you are expecting, you want to make it, all right? You want to make it, right? That's called target profit, right? Now, but of course, you need to estimate how much profit you want to target, right? So in this learning outcome 3, target profit, we gonna learn that how many units we want to make it how many units we want to make, how many units we want to make if we want to achieve target profit, all right? How many units we want to make if we want to achieve a target profit. So let me go back to the previous slide so you will understand. So in the previous slides here, you can see that if you sell DATS units using this formula, you will understand you will have break even, right? So let's say $1 is your profit and this is your target profit. This is your target profit. So means now the question is how many units we have to sell if you want to make a target profit, right? That's the idea. I want to make $1,000 profit. I want $1,000 profit comes in my pockets, all right? So how many units I have to sell? So we have a formula for it. So the formula is a total fixed cost plus target profit divided by contribution margin per unit or contribution margin ratio. Right? Total fixed cost plus target profit divided by contribution margin per units or contribution margin ratio. So we have two things here. We can use either this or this. It depends. So let's say if you want to calculate how many units you need to sell to achieve that profit, then we use this one. right? You will use this contribution margin per unit. If you want to calculate how much sales in dollar I need to make it, then you use contribution margin ratio. It depends what we needed, all right? So total fixed cost plus target profit. So remember, in this target profit, we excluding tax. Tax is not part of this target profit because tax depends upon the company profitability. Tax is not a fixed. Tax rate could be fixed, but tax obligation or tax liability that we pay to government is not a fix, right? It depends upon the profit. So we will take that tax out. If you want to take tax out, so the formula is how to exclude tax. Formula is target profit divided by 1 minus tax rates. If you do this, you got this number, target profit excluding tax. Always check whether is it before tax or after tax. We need before tax. We need target profit before tax. We need before tax, right? We need target profit before tax. If tax included, or if we have profit, target profit after tax, then apply this. Then apply it. If you have a net profit after, then you apply this formula, and then this formula will give you net profit before, right? That's the ideas behind this target profits. So it's just giving us ideas that how much profit, how many units I need to sell. If you use this, how many units we need to sell, or how much revenue we want to make it in order to achieve that profit. Achieve profit is a target profits. All right. So that's all about your learning outcome 3. Okay. Student asked me to explain excluding tax. So let me write down something else so you understand them more. So remember, we have sales minus cost is profit. From this profit, we have to minus something like as minus interest minus tax. Then we got profit after tax, right? Or let me explain another way. So minus interest, we got profit before tax. If you are estimating target profit formula, so we always use tax. We always use before tax. We always use before tax. So if in the question you have a net profit after tax, you have to come to these points. In order to come to this point, you have to add whatever tax you have paid in this number, and then you reach here. Or apply formula. If you don't have this number, you just have this number, but you don't have this, right? So how can you understand how much tax we have given? Just tax rate is given. Then what we're gonna do, we're gonna use profit after tax, which is this divided by 1 minus tax rates. If you apply this formula, you will get this number, and this number you apply in formula, which is target profit. All right, so we have to exclude the tax. All right, we have to exclude the tax, but you don't have to exclude interest because interest is always fixed, but tax is not fixed. Tax depends upon this number, and this number could be increased or decreased. So that's why better exclude this tax if you want to estimate the target profit. All right, so that's the way to understand excluding. That's the way we exclude, like this. All right, so that's all about number 3. Number 3 finished. So means today's lecture is finished. So anybody has any questions regarding this lecture? Any question? Number 3 or number 2, number 1, which is marginal absorption. Anybody has any question? Anything you did not understand from this lecture? All clear? Contribution margin. Contribution margin again. The meaning of contribution margin, right? You mean the meaning of contribution margin? Okay. The idea is in marginal costing. In marginal costing, managers or people or management argue that we should focus on something which contribute either in production or contribute in sales. Something do not contribute, we keep it separate. All right. So we know that variable manufacturing cost contribute in production. Why? More manufacturing, more production. More manufacturing cost, more production cost. Production increase. No manufacturing cost, no production. Same thing, sales. Marketing, advertising, or distribution. If you do more marketing, more advertising, more distribution, sales increase, sales decrease. So the idea is only variable cost is the cost which contribute to increase the company production or revenue. All right. Fixed cost do not contribute to increase production and increase revenue. So that's why keep them separate, right? So sales minus variable cost is contribution margin, which means only variable cost contribute to maximize production, maximize sales, or maximize profit. That's the ideas behind contribution margin. But contribution margin is not the full picture, because still we have fixed cost, because total cost minus variable cost is a fixed cost, or Fixed cost plus variable cost is the total cost. So we cannot ignore. We cannot ignore fixed cost because still it's a cost. Still it's take money out from the pockets. So that's why we have to minus fixed cost to get net profit. All right. So that's the ideas behind a contribution margin. All right. I hope you got the idea. Is it okay? Any other question? No questions. So if no question, then can we stop here?
Excuse me, I have questions.
Yep.
The break-even point, from my knowledge, that is the point that the sale and the total cost is the same. And you say that the fixed cost and the margin contributions is the same. Could you explain why the fixed cost and the margins contributions is the same after? Yeah.
Yeah, I explain you. So let me write down sales minus variable cost is contribution margin, right? Minus fixed cost is net profit, right? So for example, my sale is $10. My variable cost is $4. My contribution margin is 6. And my fixed cost is 6. This is 0. What does it mean? It means if my contribution margin is equals to fixed cost. If my contribution margin equals to fixed cost, do I have profit? No. Do I have loss? No. So that's called break even. So this is the another way to understand contribution margin. If contribution margin equals to fixed cost, that's also known as break even. That's why I'm writing here. That's why I'm writing. That's why I'm writing here. Fixed cost equals contribution margin. Fixed cost equal contribution margin, that is break even. All right. Did you get it? Okay. So any other question? No question? So can we stop here? Say something, yes or no? Not ignore overhead cost is only for margin. I did not understand your question. Can you not ignore overhead cost? It's only for margin. Yes, we have to ignore overheads because what is the nature of overheads? Indirect material, indirect labor. What is the nature of overheads? Overheads, most of overheads cost are the fixed cost, and we keep it separate. All right. All right. So any other question? So can we stop now?